Well, very quick video today. Not much has changed since my last video back in June. We've got RBA keeping the rates on hold at 4.35%. We've obviously seen a big cool down in the market as well recently, but apart from that, not much of a change, especially not in terms of interest rates or anything like that. So we'll get started, but yeah, quick one today. Very short video. Now, the RBA, as I said, have left rates on hold, 4.35% for that cash rate, and they're now not expecting inflation to return to the mid-range, which is between 2 and 3% until late next year. So what that means is hopefully we don't see any more interest rate rises, but they are poised to increase the rates where required. So we'll have to see what happens in terms of the cost of oil, which is a big part of what they're focusing on. That's still kind of having a downstream effect on inflation on products and services, obviously. So that's the main thing they're looking out on. But in terms of the housing market, in terms of wage growth and everything, it's very, very slow. Now, what this means for you, there's no change from last month. Every $100,000 that we're borrowing is still about $600 a month. A great rate for a home loan is between 5.90%, if you've got a lot of equity, and 6.3% if you're a first home buyer and using maybe a government scheme, something like that. So somewhere in that bracket is somewhere where you want to be. Obviously towards the lower end of the 5.90 where possible. Investors are very similar, between 6.1 and 6.4 for investors. Now, this is just as of yesterday before the decision, but like I said, the cash rate is expected to stay on hold. There's a chance that we're going to see another rise, but at this point, everything will remain on hold until the end of next year. But it's a long time. Things can change very, very fast. I wouldn't be surprised if we saw a rise or potentially even a few cuts between now and the end of next year. Now, first home buyers, like I said, the market is very, very slow, the property market in general. We're not seeing a lot of people jumping in at the quoted range when they're looking to purchase a property. We're seeing them offer, a little bit under or maybe on the lower end of a quoted range lately. And what we are seeing, especially in terms of the listing prices, is that they are starting to drop. I think as of mid-July, we're looking in Melbourne at about a 3 to 4% drop in market prices on average. So definitely slowing down. As for construction, we're seeing a lot more first-home buyers look at the construction route. And the main reason for this is that it allows them to purchase for a higher price, but avoid stamp duty costs and therefore minimize the deposit required. So when you're purchasing a first home in particular, stamp duty is waived up to a price of $600 and a concession between $600 and $750. But when you're building, that whole concession structure is based on the land price. So if you have the income and enough deposit to support a higher purchase price, then you can get a much larger price than you can if you were buying an established property when you're building. Pre-approvals, as always, I'm going to keep that there because it's so important to lock in your borrowing capacity, but it does not work the same way for construction loans. So we've got a few videos on our website, a few info sheets if you want to take a look. Otherwise, obviously give me a call or reach out. We can have a chat about how that applies to you. For upgraders, like I said, it's a slow market. We're not seeing many people looking to upgrade. It's more about seeing what's possible and seeing what their capacity is if they're interested, if they're finding the perfect house to move. Bridging is still definitely an option, and a lot of people are considering bridging as opposed to selling first because they want to make sure that they know what money they have when they've sold instead of stressing about having two properties and how are they going to afford the mortgage while they're trying to sell their existing home. But bridging isn't always an option. It's very reliant on the equity you have in your property, and in some cases on the income as well. So bridging is becoming more popular, but it's not always an option. And lastly, like I've said in June as well, we're seeing more upgraders more leaning towards the renovation side of things. Rather than moving houses, they're just looking to renovate their existing property. For investors, not seeing much purchasing happening. Some are considering building, but for the most part, they're looking at converting their existing home to an investment property, and then they're looking to buy a new home because that means that they can still access the grandfathered negative gearing policies, which allows them to negatively gear their personal income rather than just use the negative gearing benefits on the rental income side of things. Now, of course, speak to your accountant and your financial advisor about those details in more depth, but we're seeing that a lot more where clients are still wanting to purchase property and still wanting to invest. But the way to maximize their benefits, their tax benefits at least, is to convert the existing home to investment and then purchase a new home instead of purchasing an investment property. As for refinances, obviously it's all about rate. Everyone is looking to get a better rate and improve their cash flow. And some of the ways that we do that is extending the loan term. We don't like to do that if we can avoid it, but that is a big way to reduce your repayments. And obviously consolidating debts. The less repayments you've got across credit cards, car loans, home loans, the better. Much easier to manage. And of course, if there are any repairs around the house, you can access some equity for those minor renovations. So like I said, a very, very quick video, not much of a change since our last update in June, but the market is definitely cooling. It's going to be interesting to see what happens between now and spring when things typically pick up again, whether we do see that cliche spring rise, that boom, or if everything is going to remain as is. So be sure to reach out if you've got any questions at all. Thanks again for watching, and we'll be in touch.